What's the hidden hand behind whales holding firm and refusing to sell? Right now, it looks more like a shakeout than a market crash. Elon Musk is expanding X, aiming to make it the American version of WeChat. Copy WeChat. Replication is just the start. His ambition goes far beyond that. If you think Musk just wants to build another WeChat for the US, you're underestimating him. Tonight, we'll break down Musk's true ambitions and the big moves he's hiding. It's April 24th, and Friday is here again. This is BitcoinTV's Chinese channel, Bilian Heizai. I'm Lucia. Besides this channel, our show is broadcast daily in Vietnam, Japan, Thailand, South Korea, Spain, and English-speaking regions, with local anchors in their native languages. First, let's look at the most important data headlines from the last 24 hours. Looking at this chart of adjusted long-term holder MVRV and realized price. While long-term holders' profits are shrinking, they haven't been broken overall. The long-term holder MVRV is currently dropping, which means that for those investors who have been holding their assets for anywhere from 6 months up to as long as 10 years, their paper profits are now down. However, it is important to note that the figure is still well above 1. This means they are still profitable overall, not in total loss. For a true market bottom, this indicator usually needs to drop below 1, or even hit 0.7 to 0.85 before long-term holders give in. So we're not there yet. This wave looks more like profit-taking than a collective surrender. Plus, the realized price is trending up, showing that overall market costs are still rising. The foundation hasn't collapsed, so this is more of a shakeout than a crash. Bitcoin on Binance is actually decreasing. The 365-day moving average of the supply ratio has dropped to 0.03246, a low for 2023. This shows more people are withdrawing coins from exchanges, choosing to show DL rather than keeping them listed for sale. With fewer coins on exchanges, the market tightens. Once buying pressure kicks in, prices can be pushed up more easily. Simply put, people aren't rushing to sell. Instead, hodling is accelerating. So from a medium to long-term perspective, the news is mostly positive. All right, let's look at number 2. Ethereum dropped to $2,312, a 3.45% intraday pullback, but its on-chain foundation remains solid. The exchange supply ratio fell to 0.1227, meaning less ETH is ready for sale. Total staked amount is 39.34 million coins, roughly $91.1 billion locked up. With a staking rate of about 32.25%, the supply is still being held back. As for the proxy MVRV, this indicator mainly shows whether the overall market is mostly in profit or underwater. Currently, this indicator is around 1.03, which is still in the healthy zone. Looking at whales with 10,000 to 100,000 ETH, there's no obvious dumping, so it's just short-term panic selling, while long-term holders are steadily buying the dip. Please like and hit the bell. We don't just report the news, more importantly, we help you break down the logic and essence behind it, explaining those easily overlooked key market signals all at once. Now, lately, X has been very busy, launching 2 new features in a row, one called cash tags and the other called custom timelines. On the surface, this looks like a routine product update, but for those of us in the crypto world, what we're really watching isn't the names, but how they're taking several previously separate things and slowly linking them together. Previously, when users scrolled through posts, they had to jump to other platforms to check market trends. But now, X is starting to gather price charts and discussions all together within the content itself. And another change? It's turning certain topics into fixed browsing entry points. So, what does this mean in plain terms? This time, X isn't just suddenly supporting a specific coin. It's quietly changing the path for how users access content and prices.
First, let's look at the cash tags feature. Simply put, it puts price information directly into the content stream. Now, when users click on tags like BTC or Trump, they don't just see a ticker, they can more quickly see prices, K-line charts, and related posts. What's being changed isn't the trading itself, but where the user first sees the market data. Now, looking at the custom timelines feature, it basically fixes certain categories of topics as separate entry points, encouraging users to scroll and watch long-term. It's not endorsing any specific coin, but rather making space for high-heat, high-reach content. Once the entry point is fixed, traffic isn't just about occasional scrolling. It starts to become a sustained stay.
So, at this point, what we should really see isn't that X suddenly supports a certain coin, but that it's quietly changing the first step for retail investors to enter the market. One feature merges prices and discussions directly into a content stream, while the other feature fixes the hot topics. This way, you can start seeing the post popularity, the prices being discussed, and the overall sentiment of the conversation all within the same view. Most importantly, this isn't just a whim. This is something Musk has been building toward ever since he acquired X. What does this mean? It means Musk is playing a long game. For the past 2 years, X has been focusing on content traffic, but gradually we can feel that revenue, payments, and information portals are becoming more and more integrated. So, what we're seeing today isn't just a feature update. The bigger question is what Musk ultimately wants to turn X into.
In October 2022, Musk completed the acquisition, and by July 2023, he renamed Twitter to X. This move wasn't just about changing the sign, it was about shifting the platform's direction from a social site to a portal for the Everything app.
Actually, the first thing he changed was the blue check mark. It used to be what we called identity verification. But then guess what? Even the blue check became a paid entry point. Whoever pays gets more features and more visibility. To put it simply, what X changed first wasn't the content, but how traffic is divided up.
Once the direction was set, X started integrating the creator economy, creator subscriptions, creator revenue sharing, long form text, and long form videos were launched one after another. Posting content isn't just about getting traffic anymore. You can get a direct cut of the revenue. The platform began linking content retention with income. Once traffic can be directly monetized, content on X is no longer just a tool for expression. It starts to look more like a money making asset.
I think when you take X money and you power it with Grok together, and even super excited about the previous conversation about the impact of Grok on advertising, the impact of AI, which is going to, I want to find out where you got that ring from, but to influence, because it's a content experience for all of us when you get the ads right.
Later on, X pushed community notes directly to the forefront. This change might look like a minor feature, but it actually shifts the right to interpret information. In the past, the platform acted more like its own referee. Now, it emphasizes community additions, corrections, and labels. So, what users see is no longer just the original post itself, but a layer of judgment built around it. The post hasn't changed, but the way information is read has already changed.
By 2025, X Money and Visa announced their partnership, officially connecting the payment line. Meanwhile, Grok was also integrated into the platform. At this stage, what X wants to do is very clear. It doesn't just want you to view content here. It also wants you to understand content, process information, and even conveniently keep your money circulating within the site. Looking at each step individually, they seem like isolated updates, but when you connect them, it's clear. X is rewriting the underlying rules, layer by layer.
So, looking back now, X has recently been bringing price and content discussions closer and closer together. This isn't just a one off update, but a crucial part of the ongoing reform. First, change the name and set the direction, then connect content monetization, and finally, build in the payment capabilities. Only then do we see this phenomenon of content and price entry points merging. In other words, it's not that X suddenly started understanding the crypto world. Rather, since Musk's acquisition, it's been a step by step layout in the same direction. What's truly worth watching next isn't which features he's changed, but what kind of endgame is being assembled behind these moves. So we've just finished putting this puzzle together. From Musk's gradual changes to where we are now, you should start to realize something. The real question isn't what new features X has added, but what Musk actually wants to turn it into. These moves might look scattered, but once we piece them together, we see that Musk doesn't just want a better Twitter. It's not just a platform for posting content, but a super portal that integrates content, accounts, payments, and judgment.
Musk's earliest direction was the Everything app, first renaming Twitter to X. It's not just changing the sign, but tearing down the old shell of social media. Once the name changes, the platform is no longer just about posting, retweets, and trending topics, but starting to make room for payments, subscriptions, video, financial info, and AI services.
I mean, honestly, we really don't have an app here that's anywhere near as good or as comprehensive as WeChat is in China, you know? And like in China, you like live on WeChat basically. Yeah. Yeah. It's like, yeah, everyone who's like been there is like, you live on WeChat, you do payments, you do everything. Yep. It's like, it's great. Basically, WeChat's kick ass, and we don't have anything like WeChat outside of China. It's true. So I was like, my idea would be like, how about if we just copy WeChat?
Speaking of which, if you think Musk just wants to make a US version of WeChat, you're mistaken because for him, WeChat is more like a starting point, not the end. WeChat is strong in life services and payments and China's powerful ecosystem, but it's not in the global public opinion arena, nor is it a real-time financial information platform, let alone a super portal with AI deeply integrated into the first layer.
What X really wants to do now is twist content flows, price flows, discussion flows, payment flows, and AI capabilities together into the platform. Content attracts people, payments keep the money, and AI explains information. Discussions and prices then amplify emotions. At this stage, what X wants to capture is not just user time, but the entire path from seeing content to completing the next action.
So, everyone, stop underestimating Musk. Don't keep saying this is an overseas version of WeChat, nor is it just about making X a more convenient social app. What he wants to do is stuff content, prices, payments, AI, and judgment into one shell. If he succeeds, it won't just change X or the crypto world, because once users see info, get emotional, see the price, and are pushed to act all in one flow, it's not just about how retail investors enter, but who grabs the portal in the crypto world, and even the financial industry's way of whoever reaches the user first and takes the decision making will have to be rewritten.
In the past, the path for retail investors to access market conditions was separate. First check news, then search prices, then find an exchange, and finally place an order. But if X continues to compress content portals, price portals, discussion portals, and payment capabilities together, this chain will get shorter and shorter. At this point, what X rewrites is not just the speed of dissemination, but how retail investors enter the market for the first time.
So once this path is cleared, the first to be ignited won't be the most stable assets, but those driven by emotion and dissemination. For example, meme coins, political symbol coins, and hot event coins will be easily boosted by a wave of content. The shorter the entry, the more explosive the surge, the faster the pullback, and of course, the shorter the harvest cycle. Looking ahead, the real pressure isn't on these coins, but on the original entry order of the entire crypto circle. Many people's first reaction is to ask if X will threaten Binance. A more accurate way to put it is that exchanges might not lose trading volume first. It's very likely they'll lose that spot where users are first brought in.
It's not just money anymore, it's attention. And so how do you tokenize things in that era of the internet, the attention economy? You have attention and money as your kind of two capital drivers. And so yes, it is kind of dumb to think about cartoon tokens that trade as meme coins, but think about Peanut the squirrel. That thing went from like 300 million to like 2 billion, and of course it's come back down, but there is a cycle here, and it's not as crazy as it might look from the outside.
If users first see content, prices, and discussions on X, and then follow the payment or external trading path, then exchanges might not lose trading volume first, but they're very likely to lose their entry position. At the same time, ecosystems like Solana, with high spread, strong memes, and low friction, will find it easier to reap the dividends brought by this structure. What gets rewritten first isn't the matching system, but rather who captures the user's emotions first.
But as we move further down this path, it won't just be the market watching it. Regulation will definitely come because once a platform is simultaneously responsible for content diffusion, value display, payment processing, and emotional release, it's no longer just an information platform. At that point, regulators won't just be looking at how exchanges handle anti-money laundering and KYC, but rather whether the entire platform is shortening the path to speculation, whether it's pushing high volatility assets closer to users. So the real point here isn't whether X will become an exchange, but that it's likely to change the entry point to the crypto circle itself. In the past, exchanges waited for users. In the future, users might be browsing content and find themselves pushed all the way to the edge of price, emotion, and action. Once we reach this stage, it's not just one platform being rewritten, but the entire path that brings people into the crypto circle. Actually, what we've been doing isn't just telling the news, but deconstructing structures and looking at the essence. If you find this logic useful, remember to follow and turn on notifications. If you want to see some deeper, advanced channels, we have those ready for you too. From Monday to Friday, we'll help you review the market and look for certain opportunities within the trends. See you next time.